We're trying to build a new kind of relationship between major powers, one that's different, one that is defined by constructive cooperation, healthy competition.
That was then Vice President Joe Biden in 2013 addressing U.S.-China relations. This was a year when Biden put together a sweetheart deal that allowed giving Chinese companies access to U.S. capital markets. The deal kept China from complying with strict disclosure regulations like those that are required here in the U.S. Back then, Biden sold our relationship with China as something that would be good for business.
What matters most on both sides is our ability to deliver better for our people without it being viewed as a zero-sum game. I've said since I met with Deng Xiaoping as a young senator with very senior senators that China's economic growth is very much in the interest of the United States of America.
The Biden deal with China resulted in 156 Chinese companies being listed on U.S. exchanges with a $1.2 trillion market cap, according to the U.S.-China Economic and Security Review Commission. Longtime options trader Mike Nelson says we have to be very careful when dealing with China because there is too much we don't know about it.
I don't think people know what's going on. And how could they? Because, even reporters who are trying to get out the news, if they try too hard, they get expelled. And everything's censored in China. You don't know what's a pig in a poke. You don't know what you're getting.
Another issue of concern, investors don't seem to understand the system in China. In a 2015 interview, renowned Chinese dissident Harry Wu warned that we need to comprehend that the economy in China is very different than the United States.
The political system and economic system, including military and government system, is a communist style. All the money is controlled by the communist member. It is not so-called ownership belong to the people.
Charlie Charnago is a member of the private sector workforce in Pennsylvania who pays close attention to his investments. He is worried about where his money is going.
Investing in these Chinese companies, it's insanity. Why, any U.S. government, any government, I should say, should be investing in businesses that are in the country that they're from.
The people of California, utilizing the CalPERS retirement program, might also be a little worried about where their money is going. We've learned that California pensions held $3.1 billion worth of shares in 172 Chinese companies. We have also learned the state is directing billions of dollars in its state retirement pension funds into companies connected to Chinese military expansion. Charnago says even though he's on the other side of the country, this is of concern to him.
It's one thing to be investing in a company in China that is making widgets or iPhones or Nikes, but to invest in a company in China that is main goal is to help defeat the United States, that's kind of crazy.
Mike Nelson also believes this is a bad idea for California to be doing this.
Like we have due diligence, and we have the companies that have balance sheets that they can show us, and they have certain obligation to open their books. China has none of that, and so how on earth can you say it's investing? It's a good investment? You can't. You're just guessing.
Nelson reminds us there's a lot of good investments for pension funds other than China, including some companies in need here in the U.S. Frank McCaffrey reporting for Americans for Limited Government.